Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Jeff S., Dave V., Cindy W., and Mark R. We've got a returning guest on the program today. Mr. Joe Ovsenek is back with us to update. Joe is the president, CEO, and chairman of P2 Gold. The company is a gold and copper project developer advancing the Gabbs project in west central Nevada, United States, which is in the permitting and final economic study stages. Under the preliminary economic assessment for the project, Gabbs is estimated to have annual production of about 100,000 ounces of gold and about 30 million pounds of copper over its 14-year mine life. P2 Gold is listed on the Toronto Venture Exchange under the symbol PGLD and on the U.S. OTC markets under the symbol PGLDF. Mr. Ovsenek, welcome back to the podcast.
Thank you. Always enjoy the opportunity.
Yeah, Joe, great to have you back on. Always a pleasure to talk with you and also talk updates at P2 Gold. We'll get to the market later, but why don't we get right into some of the key news items since we last spoke. This one from June, the company announced interim metallurgical results under the Phase 3 MET testing program, showing substantial improvements of recoveries for gold, copper, and silver. I know this is, of course, interim, but talk about those results so far and update us where we are on the progress for this MET program.
Okay, just to refresh some memories here. If you remember at Gabbs, our Gabbs project in Nevada, we're starting off with about a 5-year run of oxide gold copper mineralization, which will be heap leaching. Now, the reason the project is still there and hasn't been mined out in the 80s or 90s is that it's gold and copper, which uses a fair bit of cyanide unless you use a SART plant. Now, these SART plants were developed in the first talk of them came in the late 90s. First one was built in early 2000s, but they're quite common now. There's probably 20, 30 of them operating around the world. So we have a lot of metallurgy that's just about conventional gold recovery from sulfides, flotation and that. And so that's from the 80s and 90s. We've got a lot of work there, so everything's great there. What we were a little thin on was SART plant, so the recovery of gold and copper from oxides. And so what we're doing with our Phase 3 metallurgical program is we're running 2 oxide columns. And what we're doing with that is we're feeding it with the cyanide. We run it through a SART plant where we change the pH, so it allows us to recover the copper, recover the silver. A lot of silver comes out with the copper in the SART plant. Then we change the pH again, and then we recover the gold, and then we recycle the cyanide. So that's the system. Now, when we had done our initial work with the SART plant type metallurgical program back with our Phase 2 program, we thought there were some issues with the program. Not enough cyanide was used. The columns were starved of cyanide, and therefore the recoveries we had and we used them in our preliminary economic assessment that we announced in May 2024. We were using 78% for gold, 54% for copper, and even less for silver, even though the silver is not a big contributor, but it adds a few bucks here and there. So that's what's in our preliminary economic assessment. So we're running this MET Phase 3 program. We put out some nice interim results, but what we're really looking to target overall, and I think we're well on the way here. I think we're really pumped about this. In that right now, I think, gold in the study was 78%. We should be able to bump that up 4 or 5%, maybe even a bit more. So we can get up into the low to mid 80s for gold recoveries. Copper, right now, we're at 54% in the PEA. We think we can take that up to the low to mid 60s. And those are, by increasing the recoveries, you'd have a bit more in op cost, just a little more in cyanide and that, and maybe a little more running the SART plant. but very little extra cost associated with those recoveries. So everything that we get out of that is going to go straight to the bottom line. So the project's already looks very good from an economic perspective. And so, that's why we're so excited about this. This is just going to step up the economics of this project by a nice step up for, essentially no more operating costs or very little operating costs. So it's, yeah, I think it's a big game changer for us, and that it'll draw more attention, get more people, more eyeballs on us, in that they will see that, yeah, this is for real. These guys can recover the gold and copper and make money.
We'll see what happens with the silver price here, but definitely it's nice to have, if you guys can obtain also the silver there and do so as you suggest there, that's a great little add for sure. And then also just the improvement so far we've seen on the interim results. As far as the rest of the Met program, walk us through the timing when we can expect more results to come out. Just walk us through the Met program to finish up the year.
Well, that's where the frustration comes in. We're trying to push this, but it only goes so fast in working with the lab. So we expect to be, the way it works is we'll keep running these columns. We'll probably run them another week, possibly two, but another week or two. And once that's done, we drain the columns, dry it. We've got in the bigger column, it's 150 kilos of rock from the Sullivan Zone. We'll get that all crushed, re-assayed, so that we re-verify all the numbers and re-verify all the recoveries. And then that's going to take us 4 to 5 weeks to get that final number. The whole point of this is, once we get this metallurgical results finalized, we will update the PEA with these results. So it's about 4 or 5 weeks before we get the results that we can actually put into an updated PEA. So right now, so what are we at? We're July 24th. Probably the program will probably wind down, 31st, maybe drag into a little bit into August. And then we're going to be pushing hard to see if we can compress that 4 to 5 weeks down to 3 to 4, because I'm sure you're familiar with it. There's a fairly big conference for junior miners in early September. It starts this year, September 9th, the Beaver Creek Precious Metals Conference. So we'd like to have that data out before then. I don't think we'll get the updated PEA out, but we would like to get our results out. So let's just say, I can't give you a hard date, but we're pushing hard to get it out before September 9th.
That sounds good, and probably some good timing there. The PEA update, would you expect to see that sometime in October, November, or what's the thinking on that?
Well, I have a call on that this morning after this call, and so I'd sure like to see it a lot quicker than that. We'll push. We tend to push hard on things, and I really would like to see it in September. So we'll work at that, and no promises, but push hard to get it out in September.
Okay, so it looks like we'll see some additional news coming up here in the coming weeks and coming months here. So some good info there. With respect, so with the updated PEA, Joe, just one confirmation of economic studies there. After the updated PEA, is the intent still to go straight to feasibility and start working that direction in 2026? Is that the thinking still?
Correct. We have a lot of work that's been done on the flotation side of this. So just as a refresher again, first 5 years, open pit, heap leach, oxide, gold, copper. Years 6 through 14, we run 4 million tons a year on the heap leach and 5 million tons a year through a mill. And so we have a lot of historical work, and that we've already done some testing to replicate it, so we know the numbers are solid. When it comes to the mill side of the equation, gold recoveries are 94.5%. Copper's just a shade under 80%, essentially 80%. So really good numbers there. We'll go straight out of the PEA into feasibility. We'll do a bit more SART work just to refine that. Maybe we can squeeze a little bit more recoveries out of another program. But yeah, feasibility, and the big question always comes back to, okay, if you want to get that feasibility going, how are you going to pay for it? Well, with this round of metallurgy, our phase 3, we expect to be in a position to sell a royalty if we wish. I think the sale of a royalty, if we sold a 2% NSR royalty, that would fund us right through feasibility and get us to the point where we're looking for construction financing. So that would be a big step up for us. The other way to approach it, maybe rather than sell a royalty, is okay. Do we bring in a strategic investor, maybe pick up 9-10% of the company and use that funding to start the feasibility study that we expect would move the share price up, so we could raise some more equity at a less dilutively. So a couple options there. We're looking at them, but I think this phase 3 metallurgical program really is that key that's going to open the doors for our options on moving forward into feasibility.
Joe, I like the process here. You guys are cutting right to it to the extent that you can, and definitely a good environment to be doing so here as far as moving this forward. Everything seems to be lining up, whether it be regulatory environment and also where we are in the gold market and the price out there. Obviously, this project looks quite good at current gold prices, and there's a lot of margin on the downside now as well, where the project still works quite well. Staying on recoveries, and we'll move on here. Sorry to beat that one to death, but on recovery comparables, just within the region, we've got proposed projects, we've got operating projects, lots of comparables there in Nevada. But just how would you say that, looking at comparables there on recovery, just give us a little bit of flavor there as to how Gabbs is stacking up given results so far?
On the gold side, with this second round of this third round of metallurgy, we're going to be right up there with some of the better heap leaches on recoveries in that 80%. Typical for Walker, we're in the Walker Lane trend in western Nevada, and so the typical mineralization is that free gold. So we're going to be right in the heart of where recovery should be for that Walker Lane trend gold that we're getting. Now, on the copper side, there are very few gold copper projects you'll see in Nevada. I don't, off the top of my head, I don't think there's another heap leach one in Nevada. I'm fairly positive of that. So we don't really have any comps on the copper recovery. So we're breaking a little new ground there for Nevada. Other places, like Arizona or down in South America, you're going to see gold, copper in the oxide and with mines running, but not in Nevada.
On schedule, we talked a little bit more here about what we can expect here in the coming months. I guess we'll look a little bit more into 2026 based on some of the things you said there. What's the thinking as far as exploration drilling to test some of those identified targets you guys have picked out for expansion purposes there? And then also any plans for infill drilling work during 2026? What do you think the plan would be here, Joe? Obviously, it's subject to financing, but I suspect all of this would be in 2026 at this point.
Actually, one thing we'd like to get going, so kicking it off, around the time we get the metallurgy out, this phase 3 metallurgy out, we're considering raising a bit of cash, equity offering, 2-3 million bucks, allow us to do a couple things. One would be to do some exploration expansion drilling. I'll call it that. So expansion drilling, we know that the Sullivan Zone, we got drill pads. We want to drill up dip. We know we have some good grade, some nice width that we want to get into the resource estimate there. There's also, as I've mentioned in the past, some blind targets that don't outcrop. We're pretty comfortable they're there. We want to get a few holes into that. So if we go this route, you could see us drilling sometime later in October, November. The nice thing about where we are in Nevada, we can drill all year round, and great access, beautiful spot to work. So yeah, later on this coming fall, we'd like to be drilling and doing some expansion drilling. Right now, if you recall, our resource estimate is roughly 1.2 million ounces indicated, just under 2.3 of inferred. So you put that all together, we're globally, we're looking at about a 3.5, just under a 3.5 million ounce gold equivalent resource. With this drill program, we'd like to push that up to roughly 4 and be able to point in the direction of 5 so that people can see, yeah, like there is this potential there. I think that's one thing we haven't had a chance to do. Maybe partly our fault, partly market fault, not being able to raise the funds, but is really show that there's a lot more to be had at Gabbs than what's on the table right now. So Yeah, long-winded answer, but I'd like to see us doing more exploratory and expansion drilling this fall. Yeah, infill drilling, we get that royalty sold, or we start another look at raising funds to go to feasibility. As part of our feasibility, we feel we need to drill about 15,000 meters to infill the full resource we have right now at Gabbs. That's roughly based on what we're paying for drilling, a couple $100 a meter is, 3 million bucks. And so we'd like to see us start up on that in 2026. It's not a big problem. We can probably bang that off in 6 months or less, depending how things go.
That sounds good, Joe. Yeah, that's good info there. And certainly, if you guys have a internal target of seeing this grow up to 4 or 5 million ounces gold, I think that puts it right in a very nice sweet spot there for that region. Great Basin, United States, very viable project, simple, and definitely shows amazing economics at current gold prices here. With copper and silver perking up as well, that's just a great add. So good stuff there. On the permitting side, Joe, there has been some indication of potential improvements on the permitting processing times and efficiencies, at least at the federal level, probably spilling a little bit into the state level stuff. As you know, generally a lot of the federal permits granted, the state tends to, I wouldn't say necessarily rubber stamp, but federal permits are definitely key in most cases here, depending on the land tenure. But with the potential of getting faster permit processing, does this change some of the focus towards acceleration and aggregating a complete permit application at the federal level in order to start that clock and get decisions within the same regulatory regime that we have in place? What's your thoughts there, Joe? Now that we've seen some changes, we know that it hasn't completely finished up as far as certainty as to that improvement. But what's the thinking now based on what you've seen out of the regulatory regime there in the US?
Well, looking at it from our perspective, we want to get going on this. I'd like to see us get our plan of operations in to kick off our, mining permitting later this year, otherwise early into next year. And yeah, look at, I think, with the way the administration, and it's not even just the administration, I think everyone realizes that we need more copper. And gold, can you ever have enough gold? With the copper we have, and across the spectrum, everybody realizes whether you're in electrification or AI or whatever, you need more copper to back for the power grid. So up until not too long ago, the priority out there, from what we had, the feedback we'd received, is with BLM. Well, most everything we're going to be doing is pretty much on BLM land. The BLM was giving priority to lithium and wind turbines. And now with this understanding that, hey, you can't build a wind turbine and lithium doesn't do you any good if you don't have copper to conduct electricity, the mining is starting to get the priority. So we feel that the push is coming, and we're quite comfortable that that's really going to help us get our permit moving along. So I don't want to be too optimistic, but I really think we could move Gabbs to production quickly. I don't think permitting is going to be, it's not going to be roadblocking for us. I think, you got to go through the process. You got to do the proper work, do good work, make sure you submit it all, line things up well. But I'm not expecting any roadblocks out of the permitting side of things.
Yeah, I think that is also, Joe, given you guys where you are in Nevada, given the history at the site, you have a lot of good things going there as far as being in the jurisdiction in Nevada. Of course, Nevada's primary activity, short of the casinos, is gold mining. I mean, without a doubt,
Yeah.
gold mining is a big deal in Nevada. And like you said before, I mean, yeah, we could use a lot more copper domestically for energy independence within the domestic U.S., as well as given the financials out there, of course, you could never have enough gold. So that's also very good as well. So it's very good market conditions for this to move forward. So excited to see things moving forward, and hopefully getting in front of these agencies well in advance to potential changes of those regulatory regimes later on here in the decade. And you definitely don't want to see a rush at the end either. It seems to be, you definitely don't want to be on the tail end of that period. So that's also something to keep in mind as well. So looking forward to seeing that plan of operations come out and you guys moving this forward. As far as capital structure, we started to talk just a little bit about it before, but give us just a quick update as far as where we stand with cash on hand and how far that would carry the ongoing work, Joe, as far as, if you guys had to stretch a bit here, if market conditions aren't the greatest, they're okay right now, but they're certainly not far off from what we need. Any financing needs, you alluded to that slightly, what you can say there, of course. And then last thing, especially for the new audience, Joe, the key shareholders on the roster.
See if I can remember all that. But getting down to cash on hand, like we have the cash to do our phase 3 metallurgy, update the PEA, and depending how market conditions are, if we get those things done and we say, hey, well, we're not really liking what we're seeing, we can probably keep going for another year without having to look for any money or anything else. So we're quite comfortable about things now. On the other hand, market conditions seem to be perking up. So cap structure, we're about 152 million shares outstanding right now. We're quite optimistic about, let's just say, the way the market is starting to perk up for juniors. It's just from the inbounds we're receiving here at P2. We're seeing a lot more interest from people, and it's showing up in our stock a bit more. We've firmed up a bit. Our share price has come up some, but you're feeling the momentum starting to swell just because people are starting to talk about junior miners again. And before you see them move in price, you got to hear talk about them. So it's coming. So we're quite pleased about that. We look at our share structure. Major shareholders or management. Ken and I, well, management and the board own about 23% of the company. Ken McNaughton and I are chief exploration officer. We have about, probably 22 of that. As I told you in the past, we got about 9-10 million of our own money into this. And so we're committed and big believers in Gabbs and P2, and we're going to do our best to move things along quickly. The next major shareholder we have is Waterton Precious Metals. It's a fund that we bought the Gabbs project off. They have about 15% of our company. They've been supportive. They're not looking to put more capital in, but they want to see us advance the project, and they've worked with us to, get through some tough periods here and there as we worked our way through the acquisition of the project. So that's where we're at right now. And as I say, we'll see how the market is as we move into the fall.
That's great, Joe. Appreciate that. Good to highlight for some of the new audience. You guys sitting at that roughly, we'll just round it off to 20% area of insider ownership. I think that's really a key number to see there. It's not a huge amount to where it's a problem, and it's also not so little that it's a problem on the other side too. So a good mix there. You guys will have some options here as we get into the fall time as far as potential financing, and then also just to see how market conditions are, see how the market reacts to some of these results that are going to be coming by then as well. You touched just briefly on the market. Just wanted to ask you before we go, any additional thoughts on the Gabbs or anything else at the company, as well as any thoughts on the market?
I think we've covered things pretty well. We're excited about seeing this interest in gold and copper. Every time, Ken and I sit down most mornings and, we run through where we're at. Gabbs just keeps looking better and better. We run the numbers fairly often on the project to see what we can tweak here and there. And it just looks great. We're very comfortable that at some point we're going to get this into production. With the market we're seeing now, I'd say the sooner than later, just because I think the flow of, typical when I've seen a fair number of cycles. I got a few years here. And so what I've seen in the cycles in the past is when money starts to flow into the metals, first off, it goes into the metals, then it goes into the senior producers. They're relatively cheap for the price of the metal. Then once the producers go up in price, it flows down to the mid tiers, then the junior miners, then the junior developers, then the explorers. So we're seeing that starting to come down to the junior developers. And so that's where we're sitting. And yeah, we're optimistic about the next couple of years that we can really move Gabbs forward quickly. Quite positive about the coming year or two.
Well, Joe, let's leave it there for now. For potential investors who are listening in here, P2 Gold has a market capitalization of about 21 million Canadian dollars. Why should the company be considered within the institutional, family office, and retail investors' portfolio at this point?
I think you're going to see us move up significantly. I look at the project and I'm not making, whatever my restrictions are, and I'm not making promises, but I look at comps. We're constantly trying to see what the comps are for comparative companies for P2. And we see projects that are as good, maybe not even as good, and they've got market caps in that 100 to 150 million. So our job is to make sure that the market recognizes Gabbs and that it is valued correctly. And we feel that that value at this stage of where we're at should be more about 100 million than down at 20, 25 million Canadian. So that's our job, and that's what we're going to be focused on getting done over the next few months.
And for further information, how can folks contact the company?
Well, the easiest way is just to email me. Some of my email address is on the news releases. It's just J Ovsenek, J with my last name at p2gold.com. Happy to hear from anyone, and if anybody wants to chat on the phone, fire me an email and we'll line up a call. Happy to chat.
Joe, thank you for coming back on to update, and we're looking forward to more progress for P2 Gold in the coming months.
Appreciate it. Thanks for the time.